person again, but it's nice to have the opportunity to at least check in kind of virtually here, if you will. So I'm just going to share, 5-10 minutes or so of some of the things that we're working on with respect to the legislative session. I'm going to primarily focus on the property market, as was indicated, although as with most legislative sessions, the insurance issues are typically pretty broad and pretty complex. So we'll get into a few of those things as well. And then whatever questions or comments that you guys have, we'll certainly be happy to go in whatever direction would be most productive for you all. But I'd be remiss if I didn't start off with our only OIR agency bill. We have one easy bill this legislative session that we are attempting to pass, and it's credit for reinsurance. And you won't find a more exciting insurance bill out there than our credit for reinsurance bill. I say that somewhat in jest. It's actually pretty technical, pretty complex, and something that we need to have. 30 seconds high level on that one. Back in 2017, the U.S. Treasury and the U.S. Trade Representative entered into what's called a covered agreement with the European Union. Shortly thereafter, they entered into essentially identical covered agreement with the UK in anticipation of Brexit. Basically, what the covered agreement did was mutual agreement from both parties that U.S. companies that were operating in the EU would be treated the same as EU companies, provided that EU companies that were operating here in the U.S. were treated the same as U.S. companies. And so what's that mean for Florida? It means we have to revise our collateral requirements for reinsurers, and we're doing that via the credit for reinsurance law. And why is that important? Because when the U.S. government signed the covered agreement, they told states that they had 60 months to effectuate the terms of the agreement, or the federal government would do it for us. So if you ever want to freak out a state insurance regulator, just threaten them with federal preemption. And so that's what we're working on with credit for reinsurance. It's currently sailing through with flying colors. We are in our third committee stop in both chambers. In fact, it's up, I think, at the moment in the House. And so we're pretty excited about that. Like I said, probably one of the more exciting insurance issues going through the legislature this year. So we're looking forward to having that one done. Of course, I kid about that being the most exciting issue because it's certainly not the most important issue. You've probably heard a lot of talk about Florida's property insurance market. And notwithstanding the very important credit for reinsurance bill that we're working on, Florida's property insurance market is probably the insurance issue that is of the utmost importance this legislative session. You may have heard, if not from some of your members, perhaps some of your stakeholders, that Florida's property insurance market has been sustaining losses at an incredible rate over the past several years, and 2020 was no exception. We just received our annual financial results for Florida's property insurance market a few weeks ago on March the 1st. Underwriting losses for Florida's domestic property insurance market reached $1.3 billion this year. Capital and surplus has decreased over $500 million in 2020 as a result of these sustained losses. And so this is clearly a trajectory that is not good for Florida's property insurance market. And most importantly, not good for Florida's insurance consumers. What happens in times like this, when we see losses of this magnitude, insurance companies take a number of different responses to those losses, the most notable being that they raise their rates in order to keep up with that. Just to put that into perspective, this past year, we received about 110 rate filings. 55 of those we approved for rate increases of 10% or more. And the majority of those 110 were from some rate increase just generally. So rates are increasing at a pretty astronomical rate in order to accommodate some of these losses. Unfortunately, rising rates for a lot of consumers is a best case scenario, because what's happening in certain regions of our states where carriers don't feel as if even with those types of rate increases they can continue operating, they're just simply pulling out of those areas of the state or closing off new business or closing off renewal business. And so that's causing a real availability concern in certain regions of the state, which is going to underscore the role that our residual market, Citizens, plays in Florida's insurance market. And I think we're all probably pretty familiar that we've done a lot of work since 2012 across the state to reduce the footprint of Citizens Property Insurance Corporation, taking it from just under 1.5 million policies to under 500,000 in a matter of a couple of years. But now in these market conditions, we're seeing a lot of policies head back into Citizens, which is not the trajectory that we want to head into. So there's a number of different things that we've been working on here at the office administratively with respect to that. We've been looking for ways, unfortunately, to get rate into the marketplace so that carriers can remain viable going forward. We've been looking at form changes that might address some of the issues that are really persistent and driving a lot of these losses. But it's going to come down to the market needing some legislative assistance on some of these things. We're really seeing a preponderance of litigation, primarily with respect to roofing litigation and roofing claims solicitation. We all remember probably, I think the last time I was with you all, I shared a lot of our issues with the assignment of benefits situation that we were dealing with at the time. And we were successful in 2019 getting some reforms with respect to assignment of benefits that's really brought a lot of positive changes. We've seen litigation associated with AOB go down. And so we've seen costs associated with water losses also go down. But we're starting to see first-party litigation go up. We're starting to see a preponderance of roof solicitation in the Central Florida region that's really continuing to drive a lot of these losses. And so while we've gotten some legislative assistance with respect to one issue, we've had another issue arise with respect to this that's really kind of driving these results. And it's a very unfortunate occurrence, but in both chambers, in the Senate and in the House, there have been some pretty productive conversations taking place around several pieces of legislation that hopefully will bring some much needed relief to the market and to Florida's insurance consumers. We're seeing a lot of this kind of play out directly, as I've just mentioned, with respect to rising rates and with respect to carriers looking at certain regions of the state and determining that they're no longer profitable. Those obviously have direct implications for consumers. Unfortunately, we're starting to see that this has a lot of indirect implications as well. As we look at reinsurance pricing, as carriers in our marketplace go and seek reinsurance for the upcoming hurricane season, there's finding a very hard reinsurance market with prices and availability really firming up, which is exacerbating an already difficult problem in our capital markets as well. When carriers are going to seek recapitalization, they're finding difficulty in obtaining additional capital at reasonable interest rates. And so while there's certainly a direct impact to consumers here, there's some indirect implications as well that are going to exacerbate this situation. And so we think that some legislative reform can not only bring some direct relief to consumers, but can also signal to stakeholders like the reinsurance market and the capital markets that Florida continues to be a viable place for the insurance business. And so hopefully we can bring some stability on that front as well. As with all things insurance, though, certainly when you start talking about things like litigation and tort reform and things of that nature, you really start to bring out a host of stakeholders that have wildly divergent opinions on these things. And so certainly our work is really cut out for us on this one. But like I said, we've been having a number of conversations that I think have been productive and constructive with members of the Florida legislature. And so I'm hopeful that we'll continue to make some progress on this issue and continue to hopefully address a lot of the things that we're seeing taking place as well. I would say that that's probably the most important insurance issue that needs to be addressed this year by the Florida legislature. Certainly, it's not the only insurance issue that they're going to talk about. However, and you've probably seen or have heard about an effort underway to repeal Florida's NoFault auto insurance system, which has been in place since the 70s, and replacing it with a mandatory bodily injury framework. So this is going to get a lot of discussion. The office has historically been a little bit hesitant about this change. Certainly, there is a lot of fair criticism about Florida's NoFault auto insurance system. But so far, we're not 100% convinced that the fix for some of those criticisms is to repeal it altogether and replace it with bodily injury. A lot of the costs that are associated with NoFault auto insurance are certainly not going to go away if we repeal NoFault, and instead we'll have to find another home, another funding mechanism. And while a lot of those costs, probably 75% of those costs are going to go to other areas of the auto insurance policy, a lot of those other costs are going to fall upon medical providers, health insurance, and in a lot of cases, the pockets of injured drivers throughout our state. So we think we need to have some more discussions on that front before we implement a repeal of Florida NoFault. Again, lots of productive conversations that are going on with respect to that front. And so again, another pretty critical insurance topic that's making its way through Florida's legislature. So those were the three things that I kind of wanted to touch on, and I did so relatively quickly. There's a lot to unpack, especially in those. Our credit for reinsurance model, which is our agency bill, but also engaged in conversations about Florida's property insurance market and Florida's NoFault auto insurance. But again, as was stated at the beginning, our goal here at the office is to look for ways to make sure that our consumers have access to reliable insurance products that are available at affordable prices. And so as we continue to go through the legislative session and even beyond, that's the way that we'll analyze our market. And as we find issues and things that challenge those three principles of reliability and availability and affordability, then we'll work very hard on addressing those to continue to make sure that Florida remains open for business for the insurance industry to really serve Florida's insurance consumers. So at this point, I'll just kind of pause here and see if anybody has any questions about what I've covered so far, or if you've got other topics of interest that you'd like to cover. I'm really kind of all yours for the next few minutes.
Great. Thanks, Commissioner. I appreciate your time. As always, you've got a lot on your plate. One of the things, and I'd encourage the attendees to also to add some questions if they could to the meeting chat, if you have anything that you're interested in hearing from the Commissioner about. Any thoughts on employer health insurance premiums in the future? Any trends that you see with that issue with the health?
You know, I think that health insurance rates generally have been kind of rising a little bit, probably in the 3 to 5% per year kind of range. And honestly, when we're talking about health insurance, increases of that level are kind of we would consider that to be somewhat stable in a lot of cases, just because of the cost of medical care. Generally, there's certainly a lot of cost drivers in that area, and so I don't think we see anything necessarily on the horizon that might really impact the trajectory of employer health insurance rates at the moment. Certainly, with the interplay between the role of state insurance regulators as well as the federal government, I think myself and my colleagues around the country have certainly have our eyes tuned into D.C. With the new Congress and with the new presidential administration. We expect that there will likely be some conversations related to healthcare, and so we'll be keeping a close eye on those to see how those turn out, how those develop, and what kind of impact those conversations might have on rates and availability.
Thanks. Anybody else from our attendees? Either Jim, did you have anything maybe for the Commissioner, or Chris?
Just wanted to ask real quick, anything as far as citizens, I mean, that they're looking at changes there then, citizens?
Yeah, I think citizens is always kind of an intimate part of the discussion during the legislative session. You know, the interesting thing about citizens is because even though we have significantly reduced their size, they are still, if not the largest, the second largest insurance company in the state. And so a lot of the trends that they see are indicative of what the rest of the market sees. And so as we start to have conversations, or as I should say, as we continue to have conversations about what's going on in the property insurance market, you know, Citizens is certainly going to be kind of there at the table. I think with respect to specific changes, with respect to Citizens, I'm not sure that we'll necessarily see any that are specific to Citizens. The only thing I'll kind of flag is that you recall probably a few years ago that we implemented a new clearinghouse for Citizens. One of the concerns that we had at the time was that we had a pretty effective takeout program where private carriers could come in and they could take policies out of Citizens. But what we were seeing happening was it was pretty easy to get back into Citizens. And so the legislature implemented a clearinghouse that's when you filled out an application for homeowners insurance, if you went to Citizens, you had to go through the clearinghouse first to see if there were any private market carriers interested in writing your business. that worked pretty well for several years, but what's happening now is that Citizens rates are getting out of sync with private market rates because Citizens is on a glide path where the private market is not. And one of the features of the clearinghouse is that the only way that your offer counts from a private market is if it is within 15% of Citizens rates. As those rates get more and more out of sync, the clearinghouse will become less effective. So there could potentially be a discussion about ways to keep Citizens rates a little bit more in line with private market rates so that it doesn't become as attractive as it was back in the 2012 kind of time frame. But of course, that's always kind of a difficult policy discussion because at that point, you're kind of talking about raising rates for consumers somewhat arbitrarily, some may argue. And so again, I'm not sure if that will actually make it across the finish line, but I know there's some conversations that are ongoing with respect to that.
Thanks. One other question we had in the chat: what impact, if any, do you think COVID might have on the workers' compensation market in the future?
It's a good question. I think a lot of that kind of remains to be seen. One of the difficult parts about workers' compensation and COVID, we haven't seen a whole lot of claims impact on the workers' comp side with respect to COVID because it's somewhat difficult when you have a communicable disease like COVID to make the case that it was contracted, at work. And there's a variety of different cases out there that are probably going to make the impact to the workers' comp space somewhat minimal. Would be my initial thesis, but I would anticipate, as businesses begin to reopen, perhaps. And people start moving away from the work from home format, that you could potentially start to see some claims kind of start to rise as people are back in the office and maybe contract COVID as we're in this kind of period where people are beginning to get vaccinated and things of that nature. Now, to the extent that might lead to some possible litigation, that could potentially have an impact on the workers' comp space. But at the moment, it's a little bit unclear about the ultimate impact of COVID on workers' comp. One of the things that we're doing as a group of regulators across the country, we've got a number of issues flagged that are COVID related that we want to kind of take a look back and see what do we think the long-term impact of some of these things are going to be. And we're looking at the life insurance impact, and workers' comp will certainly be on the list as well.
Okay. Did anybody else, any of our attendees or Jim or anybody have any further questions for Commissioner Altmaier today?
I had one more question, Len. Commissioner Altmaier, since the Florida Supreme Court struck down the limit on attorney's fees for workers' compensation cases a couple of years ago, what has been the impact of not having that former cap? Has it played out as we would have expected, or can you talk to us a little bit about that?
Yeah, that's actually a very interesting question, and I'm glad you asked. I would. So you've got a couple of different factors that are taking place at the same time. You've got obviously the repeal of, I guess it wasn't a repeal, but you had the Castellanos decision that removed the cap on attorney fees, and almost simultaneously with that decision, you had a pretty substantial decrease in the frequency and severity of workers' comp claims, and that second thing is definitely a good thing. But what's happened is that rates since the Castellanos decision on the workers' comp side have just plummeted. I think we approved a 14.5% rate increase in response to Castellanos, what we call a law-only filing. But since then, NCCI's annual filings have all been for substantial decreases. And so I think if you just look at the rate activity, you might think, well, the Castellanos decision must not have had as big of an impact as we thought. But if you really kind of dig into the rate filing that NCCI files each year, there does appear to be an upward trajectory in that litigation activity and in that attorney fee activity that we expected to have happen. And the reason that it's not necessarily impacting the rates that are being paid by consumers is because that is being significantly offset with the improving loss frequency and loss severity experienced by the workers' comp space. And so it's one of those difficult policy things where it's been because we've had a number of other insurance related issues like the property market and things of that nature that have been pretty important. There hasn't been a lot of appetite legislatively to go back and look at the Castellanos decision and its impact because of those other issues, but also because of the fact that rates seem to be going down quite a bit. So it's kind of a mixed bag there to sort of answer your question. I think the answer is yes, it's having the impact that we thought that it would have, but fortunately that impact is being heavily offset by some more favorable development that we're seeing in other areas of the workers' comp space. So while we certainly hope that second thing continues, if it doesn't, then the impact of the Castellanos decision may become more prevalent in future rate filings by NCCI.
Great. Thanks so much, Commissioner. It looks like we're about up against our time limit here. Thank you so much for taking the time out, as always, to sit with us and to go through all these complicated issues that you deal with on a daily basis. For everyone else that's attending, again, thank you so much for attending. This is going to be our last meeting for this afternoon. We'll reconvene again tomorrow morning. While I have everybody still on the line, I want to just make sure that we do thank our sponsors. Foundation Risk Partners, AT&T, Daytona International Speedway, Giabi Consulting and Management, Charter Spectrum, and Florida Power and Light. And with that, again, thank you so much for attending. We'll see you tomorrow morning.